Stanley Druckenmiller is considered one of the greatest investors and traders of all time. So when he cuts his stake in Nvidia, we need to be paying attention. What is it that Stanley's seeing that we don't just yet? And also, with commodities going up as markets increase for the first time since the 1980s, should we be worried? Well, the secret might be in actually what's happened over the last 3 days. And in today's video, we'll look at the next weeks, months, and year for markets around the world, including the US dollar and Tesla's fall back to one of the most traded zones. Join us as always as we cover stocks, commodities, and cryptos together for the days ahead. Let's get into it. This will be a good one. Well, welcome back everybody to The Daily Show. My name's Tom, and as always, we'll be going through the latest macro data and of course leading indicators that matter to you as investors and traders. If you want to better understand why markets move and where the flows are going, then remember subscribe and smash that bell icon. We do this every day of the week. Okay, let's get into the first story for today, which is of course to talk about the legendary investor himself, Stanley Druckenmiller. In a recent CNBC overall interview, he talked about AI, and this is the guy that averaged 30% per year for 20 plus years on billions of dollars. You cannot underestimate how incredibly hard that is to do. And remember, that was in good years and bad years. So he'd made a lot of money from being a bear when you needed to be. So he said here, so AI might be a little overhyped right now, but it's underhyped on the long term. AI could rhyme with the internet. The big payoffs might be 4 to 5 years from now. Now, do you agree with Stanley Druckenmiller's sentiment on this? Let us know in the comments down below. I tend to absolutely agree with him, and I do believe that we're in the experimentation side right now, where we're using it to help some businesses such as banks and coders and of course many, many other things. But at the same time, we haven't actually seen the wild speculation yet of the IPOs coming out everywhere. And you'd be surprised how wild things got back in the dot-com boom. So maybe we're looking at that again. Everything will end up going into a bubble, crash, and then of course from that crash, maybe you'll want to be considering whether AI really is the future. And I would suggest that I think it probably is, and I'm sure most of you right now will. But remember, if things crash, everybody poo-poos it. In this case, it's not 3D printing, it's the real deal, in my opinion. 3D printing is more for your dentist right now and prototypes. Let's go over to what the VIX has been telling us though, because of course we have brought this chart up a few times. When the VIX goes up huge, that's the volatility index for anyone that doesn't know, and gets crushed all the way back down to negative 20, it kind of begins a bullish thrust. Now, we first talked about this last week, and it's led into a very nice bullish run here on markets. But could things be getting actually even a little bit better? Well, as it turns out, Grant Hawkridge went over and found a 70 thrust, which we have quite a lot of data for. And what this is when you've got the New York Stock Exchange having 70% plus of all of the stocks in the exchange going up for 3 days straight. Now, this happened as of the previous close to today. And of course, this means that you have a lot of data to go through. Now, is it all good? Well, the answer is yes. In general, it is pretty good. In fact, 95.6% of the time, markets are bullish over the next kind of, pseudo 1 year. And we also end up getting a median return of 19.4%. So well above the average of the overall stock market. Now, I think this is important. If this ends up coming true, and remember the next kind of couple of weeks can be up, down, and all around. Realistically, if this ends up coming true and we get a massive another year of gains, then we need to be starting to think about whether we're in an unrealistic period in the markets. And this is going to be shown to us through looking at sectors and more importantly, understanding whether markets are actually turning defensive right in front of your eyes, but you just don't see it yet. Something we'll be hopefully unpacking throughout the next couple of years on this channel. So let's talk about fear and greed and of course, fear and strength. And at the moment, we're starting to see greed again. And basically markets are coming back into strength. In fact, when we see these types of reads, we usually are in 76.44% of the market, and we usually have a very good gain in the markets of 12.41%. So effectively, is this good for the market? Absolutely. And you would see that basically it means that thrusts are starting to come back across the board. Now, that's nothing new to anyone that's been looking at it. One of the big markets that you'll want to be watching over the next coming weeks and years is going to be the financial markets, KRE as well, which is the regional financial banks that, of course, came under a lot of fire back in 2023, and utilities as well, which has started to improve heavily. So it's not really the normal kind of market constituents that are going up here. It's not the normal way that you would usually see a market trade for most years. And it probably tells you we're starting to enter into what we call late cycle investing. Now, if S&P 500 follows the 2012 election year, then you would notice that maybe we've got a little bit more sell in May, but in general, we'd have a pretty good run through to that September-October period where maybe we have a little bit more of a correction or sell-off at that period of time. And this is one of the base cases that we've talked about for a while. We're either following 2012 or 1976. And we're basically around here right now, which of course had a drop in it. And then in both cases, they ended up rallying. And they also both had kind of like sell-off periods with them medium in like about the September period of the year. So what about a bullish April or a bearish April in this case? So when bullish April, which is generally a pretty good month for markets, is down, stocks can often struggle until Q4. Now, this is the data going back all the way to 1950s, and it shows you can cut data a lot of different ways. I'd like to basically say, you should cut it with those thrust indicators a little bit more. But if you just looked at every single time we had a down April over these periods, which should be basically an up month, then it can say that we have a lot of chop that comes through for the next couple of months. And then by the end of the year, things turn very positive with 17 up and 4 down. So of course, should you still be bullish this year? I mean, the stats don't lie. Basically, yes, even in the worst case scenarios, they're generally going to be looking at bullish. What about the last 24 hours? How have markets been trading? Utilities, one of our favorites at the moment, doing very, very well. Staples, healthcare, basically at this level, this 5200 level, which you'll see is a call resistance on the smaller time frames, we started to turn a little defensive over the last 24 hours. Now, that could mean that maybe there's an imminent little sell here. And as we're in a positive gamma environment, this is going to be the last point where bears can really pressure this market down. We don't have too much news. Obviously, it's more about earnings this week. Disney didn't really perform very well. PLDR got sold off. But the last 5 days, we've had really strong movements in a lot of stocks that are sensitive to interest rates, in particular TAN, clean energy, and of course, the biotech moving up very, very heavily across the board. So let's move over to our S&P 500 analysis before we get into some more data and, of course, the key charts. And if you think my voice sounds a little bit bad, yes, unfortunately, I am sick at the moment, but we'll power through this because, of course, it's very important we look at all this data and there are some big moves that could happen over the next 24 hours. So S&P 500, we've made it up to this 75 fib. We've made it up to the 5200 level. And what you'll notice is it kind of closed as a high and a low. So basically, it did a long leg doji, a high, a low, an open, and a close. So what that's telling us about the day is that no one was really a winner. The bears and the bulls are kind of, happy with where the market's at right now, and they're waiting for a catalyst to push it into the other direction. If we go over to the futures market action, we get a lot more idea. Firstly, the one-day expected moves of the options. This is kind of the standard deviation that the markets believe 68% of the time the market will stay within these kind of walls. And we have a call resistance at 5200 and a put support at 5180. So let's break down the smaller timeframes here. Let's go and have a look at how the 15-minute is kind of trading and get a bit of an idea of whether there could be some bears just around the corner. So what you'll notice is the market's pushed up. We had our resistance at 5200 over the last 24 hours. If you were game enough to sell straight on that 5200 resistance, being the call res, then I guess you'll be a little bit smiley face if you're scalping that. But to get through over the next 24 hours, what are we going to need to do? Probably close below the put support and close below this particular structure here. Now that's going to mean that we need to set an alert somewhere around 5175. And if that starts to occur, at least temporarily, we might be looking at some weakness in this market. If the market pushes through 5200 though, do remember we're in positive gamma. So that's going to start feeding upon itself, as there will need to be a lot of hedging going on. So let's explain that hedging here using the next couple of days of 0 DTEs. You'll notice here that we have the 8th of May. What have we got? A huge amount of 5200 strikes. The 9th of May, a huge amount of 5200 strikes. So basically, as we're in positive gamma, if the market starts to push through 5200 and holds above there, the closer we get to the end of the day, the more hedging that will need to be done, which means that more futures trading might need to be purchased. So in general, these are kind of the most important areas, 5200 and around that 5175 over the next 24 hours. Do we think, though, that markets are probably moving to the upside at this stage? Well, the evidence would say most likely. CTAs also agree with that statement, as they're purchasing both the NASDAQ and, of course, the S&P 500, making new highs over the last 24 hours. So CTAs are back on board the purchasing line, and they basically held that first major level, being the 20 weekly moving average. And maybe we won't get the 50 weekly moving average, although that could still happen if 5200 is absolutely smashed by the bears. It is pretty much one of the last points in this market on the way up. So let's talk about where the opportunities are outside of the US. So for a while now, we've been talking about, of course, China and the fact that their large cap AI stocks in particular might be undervalued. And so far, so good. Of course, the markets are absolutely beating the S&P 500 for this year. We started talking about this in Jan and Feb in more terms, and since then, it's been going very, very well. So as macro chart said here, short interest percentage is very high. So basically, this means that everyone's tried to short it recently, and that's why we've got that really aggressive trend to the upside. They're getting squeezed out. Now, you'd all be familiar by now with how kind of like a short squeeze works. Well, look at the recent times that we've had similar events in China. We've ended up being the bottom of the market, and we've ended up going into a very nice bull run. So to me, this is what I think is kind of going on in China. I think that they've turned it around from the perspective of the market. They've put in a lot of government support. What I call the China put sits in the market, and things are starting to maybe even turn around, even though we're climbing what we call the wall of worry. Remember, what you're fed in the media and what you're fed in general storylines is incredibly negative, but at the same time, we're not seeing that in the price action. The price action continues to make a series of higher highs and higher lows. So what about Bitcoin? People are really wondering about this. Well, here are some of the flows of Bitcoin recently. And it started off really well at the start of this year, huge amounts of upflows. Then Bitcoin started to struggle a little bit. We went to even the negative side recently, and we've gone back to the positive side in recent trade sessions. So is Bitcoin starting to pick up, or is fund flow down? I would say this is a good positive sign for Bitcoin traders that we're starting to see some flows back into the ETFs. But you'll notice that we're in a different time for crypto, a more manipulated time thanks to the rise of the ETFs. So get ready to get manipulated on in the crypto world, even more than just the Bitcoin whales. I'm pretty sure that it's going to start turning into gold over the next couple of years. All right, let's move over to developed markets advancing, and of course, emerging markets showing even more advancement. We've recently started arguing that maybe the last 15 years is of horrible returns from emerging markets is starting to turn. And if you start looking at emerging markets on the charts, you'll notice that they're starting to improve. Election year drawdowns, well, how bad could it get this year? If you take out the outliers, in general, you would not see more than a 10% pullback at any point. And recently we had between 5 and 6% of pullback. So yeah, pretty much in line with a lot of these points. I would say that maybe later on this year, if we don't go down right around now, that we would probably see somewhere around the 10%. Because of course, as we get closer to the election, which is going to be hotly contested, there's going to get more fear of the unknown. And when you have the fear of the unknown, markets hate that. Markets hate not knowing what's going on. So when they know, they go up. And when they don't know, they freak out. Disney reported, not so good, I guess. Palantir also reported and it was down. We've now got Shopify, Roblox coming out this week, Airbnb, plenty of kind of smaller tech companies. And just remember, if you are trading these, please be aware of the options expected moves. So DDOG, of course, came out with a huge move. You can see he was expected between plus and minus 12%. Disney pretty much did what the options market thought, which is around 9% to the downside. And then we've got Shop and TTD. It's going to be 14% up or down. So be warned, this is a massive earnings season with some huge moves across the board. Let's jump into the charts now. We'll start off with the VIX. The VIX is getting crashed back down, obviously showing fear is kind of dropping away in the markets. That's a good thing for the bulls. When we have a look at the bonds market and I take a look at options, they're dropping off like a rock, which again is usually very positive for markets. So this is one of our leads that led us into knowing there was a correction coming. But for now, new low. Doesn't look like the market's going to sell off too much. That's at least what that's saying. Treasuries, what's going on there? Well, treasuries have been bouncing up. As we've said, change of trend on treasuries, a little bit of a change of tune in terms of how many cuts we're getting this year. The yield curve is starting to drop a little bit now, and that's good for basing off treasuries. So maybe treasuries have hit their low. I don't know if there's going to be a huge amount of return on them, but yeah, treasuries hit that key level we were looking at for quite some time. Central bank liquidity is also dropping, but it's kind of stabilized in recent weeks. So if the market makes a new high and central bank liquidity starts going up again, that's of course a relatively good sign. Copper also holding itself up. And remember, they call it Dr. Copper because it basically tells you the economy is expanding. Now you might think, how's that possible? I'm just going to say it's government spend around the world. So government spend's long tail, takes a while. And of course, it can be inflationary, very inflationary, and we're starting to see that. US dollar, that's coming up to where we thought it would. So it's starting to rise up. Looking at how it trades around 105.71. If the bears are going to come in on the US dollar, this is around that key level. So somewhere in here is where I'm looking for a change of trend. And as always, have a patience to react and not predict. I don't think, even though you found a great level, maybe, it doesn't mean that it's excellent just to go in and sell it straight away. You either scale in or you find other available reasons for the markets to actually be moving to the downside on the smaller timeframes. What about gold? Well, gold's stuck in a range. If it breaks below 22.75, we might be all going down to 21.75. And of course, if it breaks above 23.53, we're looking a lot more positive. I'm particularly looking at silver as well. I'm looking for silver above 27.75. It even looks better on the charts. And silver's got some catching up to do. Remember, if you put silver versus gold, what you'll notice is that silver has underperformed for a very long time, but it's recently started to turn it around. So if you go on a weekly, you'll see here it's nowhere near the ratio that it should be, which is probably about 0.015. So silver still trading at 0.012. It's got some room to go up. And some people have asked, what's your kind of thoughts on silver? I think silver's going to go back to $50 over the next couple of years. So we'll see how that ends up playing out. US oil, right at our support. Great bull zone for sure. Any turn? No, not really. I don't think that oil has turned just yet. It's starting to show signs of exhaustion to the downside sell. We know we're at a good zone, but again, have we seen the V? Have we seen the turn? Not yet, guys. So we'll keep updating on oil, but for now, absolutely critical point. Another one here is Tesla. Now that's actually a pretty nasty turn. So you've got a gap up and a gap down. This actually shows that there's probably more selling in Tesla to go. And as we've already talked about, we're looking at how does it trade around the previously most traded zone and the 162 area. So anywhere in here, this is where I'm expecting Tesla bulls to come back in after Elon's massive pump job and probably his best earning call ever. He certainly did a good pump job there, getting the stock up 40%. Apple may not be convincing everyone of why it's doing its $110 billion buyback. Remember, Warren Buffett sold position recently, $110 billion buyback announced. And I think that brings Apple to something like $600 billion of buybacks over the last decade. It does show you that this is the tool that's been used to get the S&P 500 up. Whether it's Apple, whether it's banks in particular, a lot of buybacks across the board have really aided the market to find its way up. Now, in terms of where I think it could get to, I'm kind of looking at how it trades around 178 should it come back down to that level, and maybe it'll find some buyers there. AMD doing pretty well, getting back to the 20 moving average, which you'll notice on the daily is a level of resistance. If AMD starts to break through that, I think it's showing you signs of fully bottoming. And as we've mentioned, this little rally here is kind of what we expected to start happening across most of the chips. So whether it's SMCI, which has also been rallying into the 20, or it's NVIDIA, which has been rallying as well, most traded zone, even though Druckenmiller sold it, still looks pretty good on the charts. In general, these are starting to lead the market again. And when that happens, that's actually a fairly bullish sign, especially if semis and NVIDIA are making new all-time highs. That shows you that the market is ready to continue going on. Now, in this case, NVIDIA had a nice pullback. It's kind of floating around this zone, and it'll be very interesting to see how it trades now that it's sitting at these kind of more res areas. So yeah, for NVIDIA holders, that'll be important. What about utilities though? Well, one of the most defensive sectors of the market, as we've been mentioning now for a long time, is just flying. I mean, it's absolutely kicking the ass of the market itself. Like if you take from the low down here in February, it's done 17.29%, which sounds kind of like almost like semiconductor kind of returns when you think about it. But no, it's utilities. Now, this shows you that I think it's benefiting a little bit off semis, by the way, in terms of energy usage. But this just shows you that we might be entering into later cycle investing. If utilities start to go up and they're starting to perform really well, usually that means markets are getting defensive, and it's one that we'll continue to watch across the board. Another thing we'll want to be watching is, of course, home builders. How are they trading? And you'll notice here, they're still making, in general, a series of higher highs and higher lows. Chinese market holding its own, doing some consolidation after that massive squeeze went through. Still looking for the HSI to get to around 20K. Might do something like this. Hopefully something like that would be pretty cool. But in general, looks very good. And of course, plenty of AI stocks starting to bounce through. What about the US 2K? A little bit of a shooting star, a little bit of a rejection candle here, coming off that 2084 level. This is basically this supply. So again, is the US 2K at res? Yes. If we move through this res, are we in positive gamma? Yes. So if markets do take out this level here, then they're probably going to a new high. And this is what we need to do. So basically, it's the last step for the bears. And we've already talked about how the S&P might be at those key levels and what we're looking for. What about the NASDAQ? Well, it's kind of similar. NASDAQ rallied up. I've actually put a couple of lines here so you can see that if we do end up getting a sell, similar to the S&P, 17,800 will be very important for the NASDAQ. I could see this point being where the bulls kind of start to regain. So I would like to actually see a little bit of a pullback here, then bounce like this, and that would be nice. For you to be really bearish on this market, you're going to need it underneath this zone down here. If that happens, look to the 50-week moving average on the S&P. That's going to be the next level for it. And I would say that's highly likely based on the fact that it would have completely rejected here, gone fully bearish, and then we're looking for that 10% pullback across the board. Bitcoin, is it showing us any inklings of maybe what's to come? Well, Bitcoin, of course, trading around that supply. So we expected some resistance here. Let's just jump into the smaller charts so we can have a look at how it's been trading. It does look a little negative at the moment. So you're kind of thinking, okay, rally into maybe sell. 60,000, I do think, is where the kind of buyers are sitting. So yeah, little bit of weakness. Some people call this head and shoulders and then be looking for the distance. And what I always say is if you do use those kind of patterns, then what you're doing is you're trying to proof those patterns on the chart. So let's say that's the neckline, that's the head, therefore that's the breakout. If that pattern logs into where you think there might be buyers around 60K, then if you get down there, it becomes more likely there is a buyer there. So that's what we call pattern confirmation. So obviously something that does look a little bit more positive there for Bitcoin. But yeah, it's struggling a little bit with this supply, which you can see is quite a heavily traded zone. And we knew it would be at this point. For the news week ahead, there's not too much information. So that's good because that usually means the bulls are in control. Usually means there's a little bit less risk of massive moves. Not as great for day traders, of course, less big moves, less maybe volatility in the markets. But I still think we've got a lot coming the week after, which remember is CPI week. So PPI, CPI, Wednesday, 15th of May, not one to be missed. That's going to be, I think, fairly wild on the market. So it's just around the corner. If you enjoyed today's video, then remember to subscribe. Also check out our other websites, including our newsletter that we're bringing out again, and of course our X account as well. So we post a lot of links over on that. And if you're also interested in finding out more about the courses and stuff we provide, you can do so in those links. Thanks so much, guys. Have a great day.